YouTube, it's Louis here. I hope you're all well. We're taking a look at Bitcoin today. We did get that daily close that we wanted. If you're new around here, please do subscribe. We're on the road to 5K. Please do leave a comment and a like for the algorithm as well. It's much appreciated. Now, we were speaking about this descending triangle for many months, as well as the inverse head and shoulders. So let me show you the descending triangle. Sorry, guys. So this is the descending triangle. It does have a target to 10K, and we do have a head and shoulders pattern, which we're seeing across all the altcoins, these two patterns, apart from some like Quant, the ones that actually did pump, like XRP, Quant, BNB, Matic, and those that did pump early, as well as Ethereum. However, Ethereum also does have a head and shoulders target to the downside. It's just that it's a bit further ahead is what I mean. So the head and shoulders target is 14K. These two targets are validated once you do lose 18.6K, but we've been saying since June the 30th that as long as we're above this level, June the 30th was right here, we're bullish. And we've had multiple attempts at trying to break this. We've explained on the channel multiple times that Bitcoin has had 7 or 8 times now that the bears were in control, where the bears actually should have pushed us lower than this low and this low, but they failed to because of this strong level of support or demand at 18.6K. It's basically holding us, holding on for dear life, keeping this bullish. And that's why we're seeing patterns starting to form in this area over here. You could say that this was some sort of rising wedge over here, and the rising wedge pattern's target is the bottom of the wedge over here where it began. So it's nice that we completed that, and once that happens, you do start to form patterns in the opposite direction. So if we zoom out a little bit, we can see that we broke out yesterday, back tested its support. What we were saying on the channel is we did not want to close under this red line, otherwise we'd come back to 18.6K, and making this a really big chance that we actually are going to break below. But we didn't get that close below, back under the red line, validating that descending triangle essentially. So it's amazing that we stayed outside and confirmed it as support. I know I'm zoomed out, but I need to show you the whole structure. Doesn't matter too much about what the candles look like. All we know is that you come into this resistance and you back tested it as support. But we were saying in yesterday's video we could be playing around with this resistance and this support. I just hope that we don't fall back under this red line. If you fall under this red line again, that's when we come back under, hit it as resistance. It means this move to the upside was fake. It means that it doesn't want to go up. It means that it wants to go down. And that will happen if we close a daily candle back under this red line. So go ahead and draw this red line. I've drawn it from this point over here, around the 1st of June, this second point over here, third point over here, fourth point, well, there's a fourth point right there. I'm sort of ignoring these wicks. I'm going to zoom in now to show you why. So can you see we've got an exact touch there on the green one, and there on the red one. If I had put the line through there, then I wouldn't get these 3 extra touches. I'd only have 1 touch. So this line, this red line here is more valid. I've just explained why. This is also a fake out because you pumped, but you instantly fell back under. So this is not an area where you have to put an exact point. But here we got another exact point here, and now over here on the outside over here. So I know this is completely valid because you only need 2 separate occasions, as this has multiple. Now that's why we want to hold on to the outside, but of course by rejecting this resistance, the support we have here is 19K, this psychological level. You could bounce from here, but we're stuck within this 18.6K to 19.6K, this 1K range. And we've been seeing constantly, when you lose the top, see support over here, you eventually come back to it, you're holding it as support, but then you fell under, quickly reclaiming it, confirming its support. When we were holding it as support, we eventually lost it and hit the support below, quickly reclaiming it, confirming its support, but eventually failing and falling below, back to the lower support, hitting the top as resistance, back down to support, resistance. Then you started holding that 19K area. You got back above but failed, and then went back to the support, resistance, almost touching the support. We did hit it's 18.6K as we mentioned on the Twitter, and then we're back at 19.6K. So you're essentially ranging between these 2 points until a breakout. Now we had all the chances in the world to break down. That's why I was telling you over on Twitter, make sure you're following my Twitter. Check out yesterday's update as well. We were talking about the Twitter, but essentially we were saying down here, down over here, if we're to close below 19K, we're going to 18.6K on the 4-hour time frame, which we did see over here. we closed below 19k on the 4 hour, and then we went to 18.6k on the 4 hour before quickly swiftly holding that as support and climbing back up to the resistance over here. Let's go back to the daily. I want to talk about this falling wedge over here. So yeah, the pattern is complete, and when a pattern is complete, you usually form a pattern in the opposite direction. It's not 100% of the time. You can, of course, make bearish continuation patterns, but most of the time, I can't give you an exact percentage, but most of the time we do create a pattern in the opposite direction. This is just me noticing it in the almost 4 years now that I've been in the market. I started off with Forex, went on to stocks, and then Forex, and then started cryptos, and then got into crypto mining stocks. But now I'm completely off of stocks and Forex, just looking at cryptos and trading cryptos. But yeah, we're creating a pattern in the opposite direction here. A smaller one would be this potential double bottom over here. You've also got a smaller double bottom over here forming. So if we break above 19.6k, we're going to come back to this resistance, which is a larger double bottom like this. And we have to break that, close a daily candle above that to head to this next resistance, which is also a much larger double bottom like that. Can you see? So you could call that the Adam and Eve because you got a quick spike, but then a rounded second bottom like that. But also, you've got multiple double bottoms forming. So it's very nice to see bullish patterns at this bottom that we've called since the 13th of June. You can even go to the home page of my channel. Check out the home page, because the first video on the home page is actually the exact date when I called this bottom, and I told you guys that is actually the bottom. And ever since that high or low, I've said as long as we're above this, the bottom is in. If we close below this, the bottom is not in. Why? Because there's a larger buildup of bodies in this green box, in this 1k range. There's a larger buildup of support rather than the level below. So I was constantly telling you guys, since the 18th of June, the bottom is in, because we met this 17k target of ours out of this fractal over here. If you're not aware, essentially, we were telling every single person on this channel, this was this essentially. And we the target that we got from here, this C wave, is this target over here. So that's how we got the technical target. We realized that that fractal was from the past, the 2020 COVID dump. And when we meet a patterns target, we usually form a pattern in the opposite direction. So what are the patterns in the opposite direction? Yes, there could be bearish continuation patterns, like the descending triangle, the head and shoulders over here. But we're not validating these patterns until we're closing below 18.6k, okay? And the bullish patterns that we're forming is this shoulder, head, shoulder, the inverse, as well as this massive double bottom. And we've been just showing you on the channel that there's loads of little double bottoms over here, trying to essentially close above this resistance, we're going to this one, close above this one, we're going to this one, and then close above this one, we're going to this one. And that's how you have to break out of all these small double bottoms to get to the biggest double bottom resistance. Break above that and we're off. But I don't think we're just going to fly like that. We're going to definitely run into key resistances and have pullbacks essentially. But yeah, I hope you guys enjoyed today's update. We need to see a close above 19.6k to confirm that this is support. We need to break out of that first double bottom down here. Let me zoom in for you guys. We need to break out of this first little double bottom over here. Let me just give you the target in the short term. You can see you already rejected it. So going forward, we need to see the support hold, and we need to see 19.6k hold to actually give us in the short term a pump back up to break this resistance. But at the moment, it's showing that it's trying to come down. And again, because we've hit this 2017 high, we're ranging between this 18.6k to 19.6k. So it wouldn't be wrong to think that we could actually be coming down all the way to 18.6k, but there is a key support at 19k, which is a psychological level that may stop you from actually heading all the way back down to 18.6k. But we know that that is key support, that is holding us up. It's been doing such a good job. So this one, at least in the short term, should push you back up. And if we were to ever break above this, just wait until you see a daily candle close above 19,555 or 55. However, you could just wait for a daily candle close or a 4-hour close above the 2017 high. There is a key resistance here. So personally, I'm not taking this trade. But again, the main focus is break above this 19.6k. We're going to eventually head towards this, and once we break above this, we're going to head towards this, and once we break above this, we're going to head towards this, essentially. And as long as 18.6k is holding, I'm going to stay bullish. Please help this video hit 100 likes. We're trying to grow to 5k, so do help us with that. Leave a comment to help the algorithm, turn the notification bell on, and also follow me over on my Twitter, Louis_crypto, and also turn notification bells on over there. You can also private message me over on my Twitter if you're interested in my education. I have a 6-hour-long course teaching you from zero knowledge into self-sufficient trader, as well as one-to-one video calls mentorship.